Federal government accounting. First, let's talk about the federal government. We all know that federal government has three branches. You have the legislative branches, which means the Congress, right? The Senate or House. We also have the judicial branch, the Supreme Court, and then the executive branch, right? The President, the Vice President, executive office of the President. The executive branch also includes all the councils under the President, National Security Councils, right? Council of Economic Advisors, and so on. And we also have 15 cabinet level departments. For example, Department of Agriculture, Department of the Treasury, Department of Defense, right? And also have independent establishment and government corporations, for example, the U.S. Postal Service, CIA, EPA, FCC, NASA, and there are more agencies. Therefore, there are hundreds of agencies. There are also a range of a variety of activities. For example, there are defense issues, social security stuff, and also we're going to account for a wide range of resources. For example, military hardware, national parks. Some we report on financial statement, and some we don't. And we're going to deal with some of those obligations, very special obligations. For example, Social Security benefits. Yes, it's the government's obligation to the country, to the people, right? But we may not report those obligations in financial statements. We're going to talk about that. And also the extent of its power, right? The government has the power to tax its people and also to regulate commerce and do many other things. So the financial reports will be very different from the private sector. So how unique are the federal government's financial statements? All right. So basically, they are messed up. So if we use a private investor's perspective to review the federal government financial statement, it is messed up, totally messed up. So give you some idea why it is messed up. So in this graph, it shows basically the debt, the public debt to GDP ratios. So equivalently, that is a debt ratio for a private company, right? So if you look at the newest, right, the newest ratio is almost 100% to GDP. And for the next 75 years, this debt ratio is going to increase to almost 600% of the GDP. Okay? Is this sustainable? Think about it. Or give you another idea. This shows the total receipt and total spending. Equivalently, that is a profit loss statement, right? And the total receipt is revenue, right? And total spending will be the expense. Hopefully, we always hope for profit, but it's opposite for the federal government. As you can see, in most years, but some years, we do see higher receipt. In most years, receipt will be lower than the total spending. But even worse, for the next 75 years, if we look at the forecasted data, right? The total receipt will be very stable unless there's a hike in tax. The total receipt will be very stable. Total spending, non-interest spending would be much higher, will be much higher than the total receipt, even worse, right? Because we have a lot of borrowings, right? The net interest will be rising quickly for the next 75 years, and it's a gap between the total spending and the total receipt will be huge, right? By the end of the next 75 years, which is 2090, the gap will be almost more than 30% of the GDP. So how can we fund that many spendings, right? And you have to borrow again. And so, but if you borrow again, you're going to pay more interest next year. So it is not sustainable. By any standards of the private sector, the company, if it's a company, it has to announce bankruptcy. Okay, it's not sustainable. And even worse, all these financial statements are audited. Let's look at auditor's opinion. Auditor's opinion. We were unable to obtain sufficient appropriate evidence to provide a basis for audit opinions on the consolidated financial statement. Basically, this is a disclaimer opinion. Right? The auditors just cannot get opinion because the financial statements are messed up. Okay? So this is really, really bad one. We're going to talk about that, why it happens. And by the way, it's for the federal government's financial statement. Okay? For most of the agency, the financial statement, they are fine, basically. Federal accounting. Federal accounting is decentralized. We have hundreds of agencies. Each agency and department has its own accounting system and prepares its own reports. Eventually, it is consolidated into the U.S. federal government's financial statement. 3 federal agencies are responsible for the federal government's financial management. We have the Office of Management and Budget, OMB, Department of Treasury, and then the Government Accountability Office, GAO. So I'm going to talk them one by one. Department of the Treasury. The Department of Treasury is responsible for a broad range of financial functions. For example, manages public debt. When the government need money to cover the spending, right? The government is going to collect tax, but even that's not enough. The government is going to issue debt. That's from the Treasury. The Treasury is going to collect receipt and make disbursement. And also it has a minting coins and printing currency function. And also manage government's gold supplies and regulate nations' banking systems together with Federal Reserve. There are some of the important department divisions. RRS, right? Office of the Comptroller of the Currency, right? The Alcohol and Tobacco Tax and Trade Bureaus, U.S. Mint. And this is the most important one, the Bureau of Fiscal Service. Right? This is the government's central collection and the disbursing agent. The money goes in and out from this agent. And it is responsible for taking in revenues from RS and writing checks. So because of the budgetary systems, most of the federal agencies, if they want to pay, they're gonna instruct the Treasury to make the payment, right? It's executed by this Bureau of Fiscal Service Department division. Next, it's the OMB. Alright, OMB could be one of the most powerful agencies in federal government. It assists the President in preparing federal budget. It supervises executive branch agencies in implementing the budget. It reviews each federal agency's spending plans and evaluates the effectiveness of its program. It also oversees and coordinates financial management, information, and regulatory policies. It has responsibility for apportioning federal appropriations, which is part of the budgetary system. The OMB's responsibilities for fiscal management were expanded by the CFO Act of 1990. Basically, the CFO Act established a new position of CFO of the United States, and there's corresponding CFO positions within each federal agencies and department. Now, previously, there's no CEOs. There are no CFOs. The CFO is the officially designated deputy director of the management and reports to the head of the OMB. The CFO Act mandates that the federal agencies submit annual reports for independent audit. The OMB prepares an annual report regarding its accomplishments and the required improvement. Right, the third important agency is a Government Accountability Office. The GAO is a watchdog of the U.S. Congress. So this is from the OMB is from the executive branch, and the GAO is from the the Congress. Well, the GAO was created by the Budget and Accounting Act of 1921. Right? The act specified that GAO was to be independent of the executive department and under the control of the Comptroller General of the U.S. So when it was established, it was under the executive branch. The GAO was moved to the legislative branch in 1945. So the GAO's current responsibility. Right, the GAO is an auditor, the government auditor. It conducts both the financial and performance examinations of federal organizations and programs. The GAO ensures that the Congress has all the information. So it provides advice to Congress on legal issues. The GAO also participates with OMB and Treasury in prescribing accounting principles. The GAO also conducts investigations and doing research projects. So who's actually doing regulating the accounting work for the federal government? Let's talk about the Federal Accounting Standard Advisory Board, FASB. FASB was established in 1990. Right. FASB is responsible for promulgating federal accounting standards. Its mission is to establish accounting standards. Right. The FASB is composed of 9 members. So 1 from the GAO, right? 2 from the executive branch. 1 is from OMB and the other from the Treasury. And there are 6 public members, including the chair will be a public member. So although the FASB is issuing accounting standards, it is titled with advisory because it must submit each proposed standard for review to the Treasury, the GAL, and OMB. Eventually, it is the three agencies who are finalizing the accounting standards for the federal government. So if the proposal is objected, the standard is returned back to the board for reconsideration. The financial statements of the federal government are prepared as required by several rules or actors. So we're talking about the CFO Act of 1990s. We have talked about that. We also have the Government Management Reform Act of 1994. So specifically, this Federal Financial Management Reform Act required the production and audit of agency-wide financial statement covering all the accounts and activities of the federal agencies and a consolidated government-wide financial statement for the executive branch as a whole. And the third rule is the OMB Circular A136, the financial reporting requirements. Okay, so when preparing and submitting audit financial statement to OMB, you have to follow the Circular A136 rules. The federal government accounting has to accommodate two functions: financial reporting and the budgeting, basically. So accounting and financial reporting procedures for budgetary control purposes differ from the procedures needed for program management purposes. Therefore, in the federal government accounting, we have to differentiate, we need two track accounting systems. One, we have the budgetary accounting. So the budgetary accounts is for budgetary reporting purposes. We also have the proprietary accounts, they're for financial reporting purposes. So budgetary accounts can ensure that entity complies with budgetary mandates to make sure the entity does not overspend and is able to fulfill uniform budgetary reporting requirements. Proprietary accounts provide information for financial statement based on FASB standards, and they are intended to provide an economic rather than a budgetary measure of operations and resources. So most of the proprietary accounts are accrual-based, just like the accounts we use for private companies. In terms of financial reporting, federal agencies may choose to prepare an annual consolidated performance and accountability report, or a separate agency financial report, AFR, and an annual performance report, APR. So beginning with fiscal year 2007, the Department of State chose to basically use two reports, right? One AFR issued in November, then APR will be issued 3 months later in February. So basically the AFR has the financial reports and the discussions, then the APR has performance evaluations. We're going to talk about those things later on. We have accounting books and records are going to follow the FASB standards. The objectives of FASB standards include, right, the budgetary integrities, sound operating performance, effective stewardship over government resources, and adequate financial management systems and controls. So it really covers a wide variety of objectives, right, including the budgetary, right, standard budgetary integrities, right. It also needs to cover measure the performance, also the stewardship, fiduciary stuff, right. We don't see so many objectives in the private sector. In private sector, we care about, right, return to shareholders, right, and other objectives. So in terms of FASB publications, there's already a lot of FASB publications, and here's a link. You can take a look if you're interested in FASB publications. But basically, just like the FASB publications, right, it has a FASB, the Statement of Federal Financial Accounting Concept, then has standards, and then we have interpretations, technical bulletins, and the technical releases. The structure will be very similar to the FASB publication. So next, we talk about the budgetary system first. Then we talk about financial reports. First, federal budget. In order to have federal agencies to spend money, the Congress needs to pass laws that authorize those agencies to spend federal dollars. So the various laws provide mandatory budget authorities. For example, Medicare, Social Security, and the various veterans programs. Okay, so they are already laws, so we have the mandatory budget for those programs. So if you look at graphs, the mandatory spending are already over 50% of the total budget. Okay, there are still portion of the discretionary spending. Okay, discretionary spending. So in order to spend those monies, we need appropriations acts. Appropriation acts provide discretionary budget authority, which supports agency programs and operations such as defense and education. Every year, so the president and the legislative branch they are going to work on the budget that is for this discretionary spending. Okay. The problem is the mandatory spending is already huge. It crowds out resources for discretionary spending. Therefore, careful management is needed, which is vital to ensure that agencies can continue, right, to effectively achieve their missions and deliver services to the public. If those agencies are short in budget or without budget, things are going to be wrong. The agencies can continue their operations if there's a continuing resolutions, which gives the temporarily the budget, basically the budget from the previous seasons. That's a temporarily continuing resolutions. Or there will be lapse in appropriations, which means the agency is going to cease its government operations in an orderly fashion. only those accepted functions will keep to work. Other function will stop, okay? Or there will be sequestration of mandatory spending to cut the mandatory spending. And nobody wants these things to happen. So let's talk about how the federal budget is processed. The budget process. The budget process begins 18 months before the start of the fiscal year, which is October the 1st every year. Right, the President establishes the general budget and fiscal policy guidelines. The President has its focus every year. Right, and the agencies submit the budgetary requests to OMB in fall of the year preceding the budget year. Then OMB is going to identify issues and resolve most of those issues with the agency officials. Then the President is going to send the budget request to Congress at the first Monday of February. Okay, this budget request is also known as budget of the U.S. government. The budget of the U.S. government. So this illustrates the budget, the White House 2020 budget by agencies. See, more than about 60% will be mandatory spending, and then the rest will be shared by various departments, among which, the DoD, Department of Defense, is going to share over 50% of the discretionary spending, right? A lot of money. Budget resolutions. Budget resolutions refers to a framework of the budget. So the budget resolutions set the overall spending limit. The Senator and the House of Representatives each are going to draft their own budget resolution. Okay? Then the two plans are merged, and each chamber is going to vote on the identical resolutions. And the budget resolutions may include reconciliation instructions. Note, that the Congress may not reach a budget resolutions every year. In fact, in most years, they cannot reach a budget resolution. But that's okay. I'm going to talk about appropriations bills. So appropriations bills, once authorized, signed by the President, can give the various federal agencies the authority to use to spend the federal dollars. So basically, the Congress is going to work on the appropriation bills. So there will be a committee for each chamber. Each chamber is going to have 12 subcommittees. Okay, so the Senator is going to have 12 subcommittees, and the House of Representatives is going to have another 12 subcommittees. So subcommittees is going to conduct hearings and draft appropriation bills. So the full House and the Senator is going to vote on their bills. They're going to merge both versions of each one and vote on the identical version of every bill. Okay, each one, if passed, goes to the President for signature. In many cases, they're going to use budget reconciliations to get a quick result. So budget reconciliations is used basically by the senator to avoid filibusters and the 60-vote rules, right? In order to pass the bills in the senators into a law, basically we have to follow the 60-vote rules. But that's almost 2/3 of the senators, right? In bipartisan settings, it's almost impossible to pass any laws if we follow the 60-vote rules, right? Therefore, there's a loophole that many of these lawmakers can use is called budget reconciliation. So if budget reconciliation is used, right, the senator can apply the simple majority rules. So if more than 50% of the senators say yes, then the bill will be passed. The budget reconciliation cannot be applied to all the bills. Right, first, you need to have the reconciliation instructions. And also, it can only deal with any issues that are associated with the government revenues and the spendings. So I think last time when they tried to apply the budget reconciliation to pass the federal the federal lowest per hour salaries, it failed because it has nothing to do with the federal revenue and spending. So cannot use a budget reconciliation to pass the bill. So when an appropriation bill is signed by the President, appropriation warrants are sent to the various agencies by the Treasury. So if the Congress cannot agree on the 12 separate bills, it can pass the omnibus bills with funding for multiple areas. If the budget is not completed by the new fiscal year, Congress must pass a continuing resolution authorizing a temporary funding at the previous levels, or in the face of government shutdown. The temporary funding is not very convenient. A lot of functions will stop, basically. For example, new hirings or the pursuit of the new goals or new tasks have to stop because they are not available in the previous year's funding. Appropriations. Appropriations occur when President signs the appropriations bill submitted by the Congress. So appropriations give federal agencies authorities to obligate the government to make disbursement for expenditures and repayment of loans. And most appropriations expire after 1 year, but some appropriations last for a few years. Okay, once we have the appropriations, then we have the apportionment. The OMB makes apportionment of part of the appropriations, generally based on a quarterly time period, to the various departments and agencies. So they're not going to give them all the monies, but give them apportionments of the money by quarters. Apportionment systems helps to prevent department from obligating or spending more than they appropriate. It helps Treasury to manage cash and OMB to monitor expenditures levels in relation to revenues. So once the department and agencies get apportionment, they're going to make allotment. They're going to make allotment of the apportionment to their various subunits. Okay, when it receives the allotment, the unit may obligate or spend up to the amount of the allotment within budgetary guidelines. So before the agency actually obligate, it can make commitment. Okay, commitment is internal request to purchase supplies, equipment, or services. And commitment accounting helps maintain control over availability of resources, particularly if there's relatively long lead time between request to purchase and placement of purchase order or contract. So basically, commitment can make sure that the allotment or the budget is reserved for the future obligation. An obligation is a legally binding agreement that will result in outlay, resulting payment, immediately or in the future. Obligation is incurred when the agency places an order, signs a contract, or awards a grant, or purchases a service, or take other actions that require the government to make payments to the public or from one government account to another. The often used account is undelivered orders. This is very similar to the encumbrances for a state or local government, which is introduced in the previous lectures. Alright, so having seen all these terminologies, if we can put them together, we can have the budgetary accounting entries. So when the Congress appropriates debit, are the other appropriations realized in the credit and apportion authorities? When the OMB apportions debit and apportion authorities and the credit apportionment. So when the department allots the debit apportionment and credit allotment, an agency obligates, it's going to debit allotments and credit undelivered orders. Okay, undelivered orders means the obligates. When the agency receives goods, they're going to debit undelivered orders and credit delivered orders unpaid. Then the agency is going to ask the Treasury to make the payment. There's no entry for the budgetary accounting. When the agency receives notice from the Treasury of the payment, it's going to debit delivered orders unpaid and credit delivered orders paid. Okay? Then the agency is going to use those goods or services as no entry. If the agency wants to accrue some of those spendings, like accrues payrolls, they're going to debit allotment and credit delivered orders unpaid. And then the next season, they're going to ask the Treasurer to make the payment. Right? These are the budgetary accounting entries. Right, so basically, with all these entries, we can get a few important ideas. First, what is the total appropriations, right? And among those appropriations, how many have been obligated and used, right? And how many are unobligated, unused? Right? Among those obligated, and how many of those orders have been paid, right? And how many are unpaid? So these accounts and their balances can help us get to the statement of the budgetary resources which is part of the financial reports. And this is the budgetary reports for the Department of State 2020. So as you can see, first we're going to report all their budgetary resources. You can see the department has two main resources. One is from the unobligated balances from prior years, and then has the current year appropriations. The total budgetary resources, $77 billion for the year 2020. The next section, they're going to report, right, whether they're used or unused, which is the status of budgetary resources. In 2020, they have new obligations, $49 billion. Right? Then have unobligated balances, total $27 billion. So together, right, that's $77 billion. Used and unused. And they also report outlays. Actually, they have paid. Agency paid $34 billion. Right? For all those obligated, not all of them have been paid. So they paid $34 billion. So this is the basic, the statement of budgetary resources. So typically, right, federal agent is going to have four type of federal funds. It's going to have the general fund, which account for resources, mainly income from taxes. Right? It is used to pay for national defense, interest on public debt, and most social programs. Includes capital and operating expenditures. That's general fund. It also has a special fund. Special funds are used to maintain for resources designated for specific programs or activities that are funded by specific fees. For example, the Crime Victim Fund and Land and Water Conservation Fund. It has trust funds. Trust funds accounts for resources restricted for specific purposes. For example, Social Security and Medicare. Okay, they're recorded in trust funds. The largest trust fund is Old Age and Survival Insurance Fund, which is part of a Social Security, right? And it's designated by law as a trust fund and has dedicated receipt. So this is different from the trust fund in non-for-profit organizations. And finally, revolving funds. Revolving funds are accounts for federal government's business type of activities. Okay, like the U.S. Post Office, they're going to have revolving funds because they generate their own receipt. The unified budget. The term budget is sometimes used to refer to actual revenues and expenditures rather than those that are proposed. In 1968, the government adopted the practice of preparing a unified federal budget to encompass all four types of funds, capturing in a single tabulation the impact of federal activities on national economy. It is intended to provide a comprehensive measure of cost of the government's program. So later on, Congress excluded Social Security receipt and disbursement from the official calculation of budget. Therefore, the Social Security receipt and outlays are regarded as off-budget figures, but those figures are huge, right? post-service receipt and outlays are also off budget. Therefore, the unified budget, the official budget, may not be that unified, right? It misses some of those important figures. Anyway, the budget policymakers tend to include Social Securities in the aggregated unified budget. So you have to modify the official budget to include the additional Social Securities.